Dear friends, welcome to weekly view on markets. Markets continued consolidation in this week with small loss. Bank Nifty and mid cap sectors gained, while small cap sector posted minor loss. Technical charts indicate further consolidation with the upward bias. Analysis of overall quarterly two results shows that the earnings recovery of the companies after 5 quarters. Managements of the companies look more confident about profit growth in the coming quarters. In view of this, investors have to remain invested and continue their SIPs in mutual funds for better returns in the long run. Nifty closed at 25,492 with a loss of 229 points, that is 0.89% loss. Bank Nifty gained about 100 points, closed at 57,876. Mid-cap index gained 17 points, closed at 59,843. Small cap index lost about 189 points, that is 1.66%, closed at 18,075. India VIX has gone up further, it is at 12.55. Now let us look at sectoral performances. Most of the sectoral sectors had small losses during this week. Only three sectors, that is PSU banks, NBFCs and oil and gas sector gained small. PSU banks gained around 2%. They had gained around more than 4% in the previous week. Again, PSU banks have gained 2% in this week. PSU banks particularly have posted very good results and their asset quality has improved. The provisions of the banks have come down. That is the reason we see a lot of buoyancy in public sector banks. Media sector lost around 3.17%. Consumer durable lost around 2.58%. Defense sector lost around 2.17%. Public sector companies lost around 1.91%. Infrastructure, metals, information technology, commodities, FMCG companies, energy sector all lost between 1 to 2%. Manufacturing, private banks, healthcare, real estate sector lost between 0.5 to 0.8%. So overall, the market sentiment was slightly subdued. We see more declining stocks than advancing stock during this week. So it denotes more of a consolidation rather than a sharp correction. Now let us look at technical charts. This is the daily chart of Nifty. We can see that Nifty went up from around 24,500 to 26,000. It touched 26,000. It was a kind of non-stop rally. After that, we have seen again correction. It has come back into this band. Now, this is the support line on the lower side, and the resistance line is on the higher side. So it has come back into the into the band, and this kind of action shows more of a consolidation in the market. This is the daily chart of Nifty Midcap Index. Midcap Index is also showing a slight downward trend. It is not able to maintain at higher levels. There is selling pressure coming on the higher levels. So whether it will take support at around 58,800 levels or 58,500 levels looks like a good support. If it takes support at these levels, then we'll see further rally in the mid cap index. Or if it drops further, there is a very good support at around 57,700 levels. So I expect Nifty mid cap index to take supports around these levels and go up because the earnings of mid cap companies have been quite good. This is the chart of Nifty small cap index. Small cap index is also in this broad consolidation range. Higher side it is 19,000 and lower side it is around 18,000, and now it is at the support levels. Mid cap, small cap index also is likely to take support at around 18,000 level. And why I am telling is because there is a good earnings recovery in the small cap space also in this quarter. This is the daily chart of Bank Nifty index. Bank Nifty index is also at around support level of 57,000. Bank Nifty index should take support and it should go from here. That is what is the expectation for the coming week based on the technical charts. Now let us look at some of the macroeconomic fundamental parameters. Indian macroeconomic indicators continue to remain quite healthy and strong. RBI forex reserves is at 689.73 billion US dollars for this week. It has come down by 5.62 billion US dollars in this week. Forex rate is at 88 rupees 66 paise per dollar. Dollar has strengthened against rupee. The dollar index has moved from 97 to 99.80 level. Rupee has weakened from 87.5 to 88.66 rupees per dollar. Brent crude price is at 63.6 US dollars per barrel. Gold price is at 1,22,020 for 10 grams, 24 carat. After falling for 1 week, the gold has slightly given up move during this week. FIIs have sold 1,632 crore during this week. On Friday, they have bought, but for the entire week, they have sold 1,632 crores. Their selling pressure has definitely come down, and on few days they are buying. DIIs continue to buy. They have bought 16,677 crore in equity during this week. So if FII continue to buy and DII buying also is continuous, will support the market and take the market to the higher levels. PMI manufacturing index for services has come at 58.8 for the month of October, and manufacturing index has come at 59.2. These indicate that expansion in the economy is quite good. So PMI index above 50 denotes expansion in the economy. So 58.8 in services and 59.2 in manufacturing is quite a good indicator showing that economy is expanding quite nicely in India. Auto sales for the month of October has come quite good. As per FADA data, the sales have gone up by around 17% year on year. So this is due to the good festive season. We have looked at the charts. Charts indicate further consolidation with positive bias. Earning season of quarterly two results comes to an end this week. Large cap sector has posted around 15% growth in net profit. Mid cap sectors companies have posted around average of 23% growth in profit, and small cap sectors companies have outperformed with more than 45% growth in profit. This is really a surprise. So earning recovery is seen after 4 5 quarters. That is almost for more than 1 year. That is the reason that the markets were struggling for last 1 year. There was no earning growth. I had been telling in earlier months that the earning recovery is around the corner, and we have seen some good earnings in this season, which is likely to be further better in December quarter. In view of this, investors have to remain invested for further gains from the markets in the long run. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.